definitely those two projects, which showed a lot of people that people are interested in just having their stablecoins being put to work and get some yield, right?
You are either subject to reporting live, which is impossible, or you try to still report your actual holdings once a day, once a week.
One thing before the chart went down 95%. I am an investor in that one. That feels bad, man. It feels still up somehow, but it feels bad. Welcome back to another episode of Stabled Up, our premier weekly show covering the ins and outs of digital dollars, stablecoins, and the future of decentralized finance.
The show is made possible by Frax, and Frax is powering the financial engine of the internet, powering FRX USD and Genius compliant stablecoins. This is the Stablecoin Super Cycle made possible by Frax. Now enjoy Stabled Up, our weekly stablecoin show.
Welcome to the Roll TV Stablecoins Year in Review 2025. Halko Piotr of StableWatch. Guys, you built an amazing platform. Your data is amazing. Your work's great. You do great work. Stoked to have you guys on. Boys, your brothers. How did this start? How did this happen? How did you guys build StableWatch? What's your backgrounds? Talk to us about kind of what happened here and how you got to StableWatch and a bit about the origin story, guys. Welcome on.
Sure, yeah, very happy to be here. Thank you for having us, and a big fan of the show. So, yeah, really glad to be here. Yeah, TLDR, like last year, I've been managing some small fund with a friend. I've been more on the venture side of it, and Philip, Yavor, Alan, big thanks to you. The guys did amazing work on the liquid side. We closed off the position last December, and we started looking into is how to utilize the profits with stable coins and just get less risk exposure with our portfolio. And this is the time I find out that the space is not saturated yet. So early this year, there was not that big of a market cap for the whole category. However, people really wanted to get exposure into stablecoin somehow because we had this acquisition of Bridge by Stripe, and this also, those yield-bearing stablecoin category was somehow a proxy to get exposure into all of that. This is how I perceive it. However, what's been lacking is, or was until we launched StableWatch, was the data around all this kind of products. That's one thing. And the other is risk profile of those. And while we're not telling directly if we think that this or other coin is AAA or triple B, we still try to help people understand what are the risk areas associated with each of this type of assets. And early this year, everybody been thinking about like stable coins as like one very broad big category. This is not what we think. And also now regulators in US, they also made this distinction between payment stable coins, so the ones which are not sharing any interest with its users, like USDC or USDT, the two giants, but there are many more of those, and the yield-bearing products. And are those stable coins actually? And you can argue about that. Definitely, those projects would like to call themselves stable coins, but not all of them are. There's a lot of regulatory arbitrage actually, and there's like much more nuance into it. Regulators also seen it. That's why the Genius Act is actually talking rather only about the payment ones. And the
So Sam from Frax, he's laid this out so many times on the show. He's probably been on 3-4 times. Like, there's two types of stable coins. There's the Genius compliant now, and like there's like these yield bearing ones. And so it's very clear that that's happening. We're gonna get the history of the year in review for yield bearing up here shortly. Halko, I want to give you a chance to introduce yourself, give your side of the story. How did StableWatch come about? You and your brother. Who's the smarter one? Who's the more business savvy one? Who gets more chicks? Talk to us about what's going on here.
Oh yeah, so like pleased to meet you guys. So I think TLDR is I think for clarity, Piotr is the founder man, so he does all the kind of like flag and hard work. Right, we are literally like shouting at him in internal chats, and that's our role as usual. And for me, I have been like doing full-time DeFi since like 2021, and before that, I was doing FX and rates for like emerging markets in a huge institution. So went from trading illiquid stuff to trading highly speculative illiquid stuff. So it's like one another. And obviously, once you used to do finance in the past, it still chases you. So sooner or later, you realize that everything we do here are various reskins or kind of like various takes on some old concept of finance that we'll try to solve under new constraints. Right, because what blockchain gave us was insane transparency and insane speed, but at some trade-offs, and this was basically very, very interesting thing. So throughout like the few years, I was lucky to work on a few projects, and we like all the crazy things. It started completely randomly, which means he wanted to move from the Telegram channel to more like data, and then we started
I love
to
it.
dig into data. And then at some time we realized that hey, actually we have more data than anyone else, just through like pure force of like sheer will. So it was like a very Nietzschean thing, I would say.
Dude, Robbie and I met at the University of Florida. He's not here in university, and I had a bit of like a marketing background, and we just got on a call one day, and we were like, dude, we should start a podcast. This was like April 2020, and then we just filmed our first show, and then the rest is kind of history. So it's awesome. It starts small, and then you realize you get this edge in data, as you're saying, Halko, and you guys have a lot of desire, and obviously you get the point of what we're doing here. You've been here for 4 or 5 years now. You personally, at least, so you see the vision, the value. So, guys, thanks for being here. Let's kick this off. Year in review. Let's start with yield-bearing stablecoins, guys. Piotr, you did a great job there explaining kind of how they work and how they're a little bit regulatorily different than Genius compliant stablecoins. They've obviously caught a huge bid. I mean, January, we started at $7.5 billion in total supply, TVL for top yield-bearing stablecoins. We topped out in November, just after kind of the whole 10-10 thing, about 22, 21 billion there, just slightly down closer to the 20 billion mark now. I mean, guys, what a year. 3x or so on yield-bearing stablecoin supply. What are your reactions here? Leo, if you scroll down just a bit, you can actually see the stablecoin names and the colorings. But Piotr, kick us off here. Did you expect this? What led this? Why did we see a 3x in yield-bearing stablecoins supply, given that we had a rate-cutting year this year with the Fed? We had different kind of quantitative tightening from the macro level. That's come to an end, but clearly there has been demand for these assets. Talk to us about what happened this year.
Yeah, so yeah, we definitely like expected it because this is like amazing category, and we realized it's pretty much earlier than a lot of people in the market. That's why we've bet with all of this data and research on this category. And I don't know how many times I've heard it in this space, but we're very early, I believe, with this yield bearing space, as all of the credits and this type, like private credit, like CLOs, this type of instruments, I believe they're going to be tokenized in the next few years. And there's a lot of push from the TradFi players to actually common chain. Everybody from the big names is not even experimenting. They actually like having the departments which are working heavily on coming and tokenizing stuff. So this is happening already. So I assume that we got still really a lot of upside when you look at at the total market. And what happened is even slightly before this year, we had only two players really focus on the category. So Sky, but before the rebranding, so still as a maker with Savings Die, and then Ethena. And the SDAI, actually, Savings Die been really great product, worked for quite some time, but not so many people been interested about it. But then a lot of hype came when Ethena guys tokenized the delta neutral trade, right? We've seen a lot of investors being like killing each other to get into the round, etc. And at that point of time, that was big alpha, which could be tokenized, and actually the yields at the beginning of SUSD been very, very high and relatively risk adjusted, to say, if you compare to like whatever other options you had in the DeFi market at that point. But over the time, the biggest unlock for growing the category being definitely those two projects, which showed a lot of people that people are interested in just having their stablecoins being put to work and get some yield, right? That maybe they don't want to have like ETH exposure, or at least not directly, and they feel much more
Yeah.
safe if the asset is somehow associated with having this peg or whatever kind of support at around
Yep.
$1 level, right? So that being it, and the other trigger, actually, as I said earlier, being the bridge acquisition by Stripe.
Mm,
So people realize,
mm,
hey, I can't really get exposure into the
mm.
stablecoin space anyhow. What I
Yep.
can
Yep.
do to calm and get some yield, whatever, how I can get exposure. And I believe this is why we've seen this growth. And if you look at this chart, you're gonna see that actually like big part of it is marked as other YBSs, because
Yeah.
beside like 3x grow when it comes to the TVL at the moment, we also experience, I think, like 30x or even more growth of projects which are like
Mm,
providing such services. So at the beginning of the
mm.
year, they've been few, and I remember I like did some research and made like Excel file. I found more than 100 of them in April. Like this post really boomed on Twitter, and from that
Yep.
time still each month you can see quite few projects, new projects come to the space. Most of
Yep.
them are actually replicating models which are not scalable, not safety either. So there's a lot of stuff which
Yep.
to be really
And we saw different events shape this market this year, right? Like for example, Sky just launched their OBEX incubator. That's probably going to shape the trajectory of their growth next year. Ethena had that hard-coded 1010 event where had Aave not saved their ass and Binance not have screwed them over probably in some way, the whole market structure would look different for them. And they got a big TVL decrease from that as well. And just kind of seeing a lot of sentiment readjusting. Uh, Halko, from your side, with the more specific teams here, I'm going to put you on the spot a bit here. Where do you expect the majority of growth to come from? From the SUSDS, SUSD, Buildo, Syrup USDC, or USYC, or others? Kind of where are you placing your bets for growth for 2026 based on what happened this year in 2025? And just any other thoughts to add on to Piotr there?
No, uh, I would say as follows. It depends whenever we are going to look into DeFi and having more yield from DeFi, or are we going to look into external sources? I think with like, because I think Ethena has been the flagship trade for the past 2 years, right? Literally,
Yes.
Ethena went from being called with very dubious names, I will not quote here, into being the biggest, thing in DeFi.
Yeah.
And it's worth maybe jumping back to some kind of like DeFi archaeology. So Ethena has been the flagship, you could say, delta neutral, or like the basis trade. So the guys were
Correct.
insanely smart enough to realize that you have lots of free food on the table. You can tokenize and you can grow, because the rates have been very, very easy to farm and to get insane yield over the risk rate. So any risk taking was really worth it. And if you remember, guys, if you have been here before, let's say 2022 and 2023 early on, when GMX was the biggest per platform, they have their tokenized LP position that some people also tried to build delta neutral about. They all blew up. It was
Yeah,
insanely fast.
GLP, RIP, man.
Yeah, because
I
all the
was
delta
there. I was
neutral
there.
strats on GLP, they all started to lose money. So it was very interesting to see how people are going to extract money from delta neutral this year. I was like very curious to see if and when and how. But what was interesting that Ethena basically said, "Hey, we have found the alpha, which was hidden. They made it public and they let it grow insanely high."
Mhm.
Which means if we discover any new source and we manage to mine this source of alpha from any new source in DeFi, then I think it's up to Ethan, up to anyone else to once again find it,
All right.
tokenize, let it grow. Right?
All
If
right.
no, we'll
He's
finish.
on Team Athena. How could Team Athena bowl? I'm gonna just fade that completely. I did miss the Athena seed round. They didn't let me in, so I as an investor, I must FUD them. I must go with the Buildo, BlackRock's Buildo,
Hmm.
and Securitize. I think that's gonna absolutely explode next year. And then I would actually go with the USDS. I think OBEX is going to come through. We've been having the framework guys on every couple of weeks, and they've just been sky pilling me till nonstop. Um,
I
now
think
that would be
Skypeing
my
is
takes.
right. Yeah, Sky Peeling is great, and I think Sky Peeling is like the best of both worlds because Sky, if you look into Sky, Sky is actively managed, and Sky team is coded, which means most likely if you don't want to chase good stuff, Sky is doing that for you, right? So you see, and it's like a completely transparent, but you can see Sky spec in real life, and you can see where the guys were at, and quite often the Sky team is in the hot safe stuff before anyone else, and that's very interesting, right? But
Yeah.
then when we think
Yeah.
about build about off-chain assets, this is like very something you can like talk for hours about,
Hmm.
because technically we are porting real life yield onto blockchain, which is super cool. But we are still very early, and right now the cost of doing so is still expensive. When you look inside, the cost of setting up things, tokenizing, the level of expenses is crazy high.
Mm.
So if this continues to grow, if consumer says we want faster, better, cheaper, more transparent, everyone wins. And I think
Mm.
if we want for this sector to win, we also need to kind of like tell guys we like it, but you want more transparent and cheaper. And then suddenly you basically open that and like democratize access to lots of like
Yeah.
instruments to the people.
Well, that's
So
why I like these neobank plays. I like the plasma one thing before the chart went down 95%. I am an investor in that one. That feels bad, man. It feels still up somehow, but feels bad. Kraken, Coinbase, all these kind of neobank apps, they get that democratization of access to stablecoins globally. And like now they're doing with tokenized equities. It's just going to keep growing, guys. So this is yield bearing stablecoins supply. We're going to switch to the heat map because I'm a little bit confused as to what's going on with this heat map. So we're gonna have to ask our local risk manager, Halko, here, and founder of StableWatch Piotr about this heat map coming up. But yeah, I mean, guys, it's clear that the yield-bearing stablecoin supply is going to grow next year, and we'll see where we end up. I would expect 100 billion to be in sights, to be honest.
Haliday is unified crypto payments. Give your users more wherever they are. Go to haliday.xyz to never write a smart contract again.
Looking for yield that stands out? InfiniFi gives you just that. Deposit stablecoins and earn far more than the current savings rate. InfiniFi is a battle-tested, reliable DeFi platform that is ready to go. Head to infinifi.xyz.
Yeet is built for big moments. The most fun you'll ever have with your crypto. Go to yeet.com to yeet into your next game.
Yeah, so let's switch to the okay. We're waiting, yeah, we have it. So as you can see, there's like one huge winner, and really easy to spot it. And we'll add I would need to add something to what Halka said about Ethena. It's like
Okay.
this strategy is great. However, it's like pretty much the alpha is over. Too many people at the moment are like playing
Spicy
the same
take.
game, right? So I think Ethena guy is definitely gonna come up with some new ideas. There's strata, new tranche products, so the team is doing great. However, like this strategy not gonna provide the same kind of returns as it used to, and you can just see it at any other ecosystem which don't have SUSDE deployed. They always have some local option. Some
Mm.
smaller team gonna do it, but the yield is never at the same level as when SUSDE been launched.
Yeah,
This is one
and
thing.
their converged chain too, man. I mean, at terminals shut down. There's like this terminal dex. I don't know if you guys saw that. They announced that they were shutting down Converge. I haven't heard much from that. That was supposed to be like the Athena securitized chain. Um, I don't know, man. I'm not one to stomp on any graves. I think Athena's going to do great, but I hear what you're saying, Piotr. It's the 10-10 just kind of shook a lot of people out of that perps farming trade. I think the perps farming was super active, and I think it shook a lot of people's boots about Athena. We'll see. We'll see their comeback and if they can create more alpha. Obviously, SUSDS 791% here, Buildle 200%, Syrup 2,500%. What are we looking at here? It's an overview of yield-bearing stablecoins market leaders, showing supplies and color-coded 365-day supply change indicators. Okay, gotcha.
but the thing is worth adding here, it's all apples and oranges, right? Because
Mm.
yield bearing stable coins is a gigantic bucket. You can throw in lots of things.
Mhm.
It's kind of like saying fixed income or like bonds are like one thing, and obviously you look inside and everything is different. So very quickly we realized, right, and we kind of like came with like all the categories of, you could say, yield bearing stables. Technically lots of those, even themselves, they do not market themselves as yield bearing stables, but more of like tokenized yield assets, because they both say we may not necessarily be stable. Some of our principal may be at risk because we are doing risk kind of like risk taking within some frontiers, right? So lots of those things should be a little bit volatile by design. The same thing, you look into TradFi, you look into all those like bond ETFs, credit ETFs. They all are volatile. They all change over time. They mostly go up, sometimes not, right? And with yield bearing stables, how to call them, uh, we also have the same, right? That where you may see yield bearing stable A offering 4% and B offering 8%, but you need to answer right what's inside, right? So technically, looking into the most flagship thing, right? One of those could be some kind of like very safe wrapper of either like off-chain assets and maybe safe positions. Something else could be a black box. So you may have more black boxes, but were like more tested. So the famous Ethena that we mentioned, or you may have actual like evil black boxes. So the infamous stream, right, which
Yeah.
ended
Yeah.
ended horribly, and it's as you even said yourself, right, with those black boxes come great risks because lots of assets we can price on chain and real life. Those strategies face lots of new problems because, once again, think about TradFi. You run a fund, you have fund units, you report your NAV once a day, once a week, once a month, maybe. Now think about Ethena and peers of Ethena, which are also tokenized strategies. You are either subject to reporting live, which is impossible, or you try to still report your actual holdings once a day, once a week. And that's where this problem that you describe in Aave comes from, where you may have a divergence between the book value or like the actual market value of the product and the market expectations, right? Which means if
Yeah.
Ethena hadn't been kind of like hard coded, it would have repriced under the market panic and could have exactly triggered a big spiral.
Yeah.
Some protocols like Aave went with like hard coding the price, thinking we believe into kind of like book asset value, and whatever happens, happens. But this is a massive trade-off, and this is a massive challenge. And I think if this is misused, we will all also pay the price. So we have to like be
Yeah.
very, very careful.
Yeah, it's DeFi after all, isn't it? It's supposed to be permissionless. Yeah, Piotr, add there.
Yeah, so when you look at this chart, one thing to add is when you manage like any money, like one of the things you should care about is the concentration risk. And why Ethena is experiencing this drawdown in the TVL quite massive is because the whole yield is coming only from one source. So this trade, right, on the exchanges, the basis trade, and then there's a neutral position, and kind of people who are using all those products, those are pretty much sophisticated people who are here in DeFi for quite some time because, hey, we don't have any new real users for the last few months probably. And those people know that they don't want to lose money. And the only option to diversify your portfolio and be pretty much in secure spots with it is Sky, so SUSDS. And that's why you can see that at the moment, this is the biggest yield bearing stablecoin. This is one thing. The other is that it experienced the most growth. And I think two factors add to it here. One is that the portfolio is really diversified. Actually, Sky used to allocate through Spark and Spark liquidity layers, so one of the sub DAOs, into Ethena, but they withdraw all of the positions
Yeah.
when
Before 1010.
yeah. So before that and around that time, that's it. But it's not only in DeFi. Actually, we like work on the risk side with a lot of clients, and our stance is that DeFi at the moment it's not as scalable for really large capital. That's why what is happening. You can see that a lot of tokenized assets, but
Yeah,
TradFi exposure.
CLOs and T-bills and treasury bonds and all these types of things, right?
Yeah,
Sky's
so
really pushing that with Grove and even
yes,
with rates coming down, Piotr, now it's like T-bills were like the standard, like the set, like the one all be all US T-bills. But now it's like, well, rates coming down, we need to look at some CLOs and stuff as well. Guys, we're gonna flip to the yield paid out by yield bearing stablecoins chart, but please, Piotr, please, because it finished
sure.
on it
Yeah,
aligns with
yeah.
this next chart.
As you said, like growth and like overall, Sky is doing really great work when it comes to diversifying the portfolio and letting you as user in whatever part of the world, it can be Africa, where you can zero option to tap into US financial markets, and especially like credit to like large institutions, and growth in Sky invested in JAAA, for example. And thanks to that, you can say that they're lending money to Burger King, for example. Not many
Mhm.
people talking about it, but like really huge things happened this year in our space, mostly thanks to Sky. And this is
Love it.
pretty not like widely known what Sky is doing, because like DAOs are really hard to understand. If you're gonna look at the
Yeah.
Atlas, right, and all of those governance write-ups from the Sky, it's pretty complicated to comprehend all of that. So hint from our side, look and follow StableWatch, and someone like Sky Learning Center maybe is coming to your home
Yeah.
Q1. But when you're gonna look at the yield paid out, we cross like cumulative YPO for this year. This number for this year is like 135 mil, but from the start, so you could say 1.5 year, we already paid more than 1 billion of yield paid out. And you can think that it's a great number. My prediction also is that we're gonna cross that still this year. We did actually, we had a market at Kalshi on that, so you can bet on
Hmm.
this. Pretty cool. Yeah, feed with our data. Um, and this is great for the space, but we go much higher. This is not even like 1% of what is paid out by TradFi institutions with
Yeah.
any dividend or like payments out of
Mhm.
like CLOs,
We're
whatever
still,
kind of
yeah,
lending
we
borrowing activity.
yeah, we're like still a small niche for like 100 people that's online. Like when you think about it realistically, and we are literally like the alternative of the alternative solutions. So we may be thinking, well, like uh, because I think it's worth remembering lots of us come from various backgrounds, and for like average person, anything beyond $1 million is a number hard to imagine. So especially like
Mm.
billion sounds impressive, but then you compare ourselves like the entire DeFi to still traditional managers, and you say, "Hey, I've got like 1 billion." Say, "Oh, wow, that's so cool! Like it's like baby number." Call us like when you have like 20 billion, and then you realize like entire DeFi, like entire like stablecoin supply, is still nothing, right, compared
Yeah.
to the lots
Yeah.
of things which like traditional finance. So, assuming if we are believing that like blockchain is like a future rail, we are so early that when you think about these graphs about the scale, we are as much on the left as you can imagine, right? It's still everything
Yeah.
is like
Bullish.
in front of us. Yeah, like literally like very bullish. So
Yeah, yeah. So the core trends here, guys, SUSD growth all the way through October 1010, then compression. Other yield bearing stables, slight growth, big growth, also compression, general growth and compression following the market. It's quite interesting how even though stable coins are stable coins and their yield bearing stable coins are meant to be a dollar and hold that value, they also kind of trend with the market. Like it was up a bit in Jan and then it kind of pulled back. As you can see, a slight pullback when the market pulled back into March. Bitcoin pulled back down to 75K or so. And then we rode it up to 125 into October. Stable coins, yield paid up, grow. Now we pull back a bit. This
there
is
is
a
another.
super left brain, like super smooth brain question, but what's happening here? Why is this happening?
I think.
Yeah, I think, yeah.
Oh, go ahead. Like
Okay, yeah.
like many things here going on.
Few factors, but like one of these probably is that we see that like with any wave of like new cool technology, there's a lot of like helicopter money coming to this space. So if we see that topic is hot because the market condition is great, the more VC is also gonna pump money into the market, the more projects of this kind gonna come up with some additional incentives, etc. Um, we actually at StableWatch track only real yield, so whatever
Mm.
tab you can see here, this is only real yield. There's no like additional governance tokens or whatever. But still, a lot of users are coming to the space because of launches of those new products. They also want to earn points or whatever kind of another incentives. So this is the one stuff. And the other is that, yeah, it just very much dependent on the market, as
Yeah,
you say,
yeah,
because it's still big part of this capital is coming from retail still. I would say that, yeah, some part, those are institutions. This capital is actually much more sticky at the moment, even if you could think that it's mercenary, because mercenary capital is always looking for the best risk adjusted
of
option.
course,
So
of
that's
course.
why it stays with Sky, for example. But retail is much more likely to move out and move in just based
Yes.
on emotions, and this is mostly what we are experiencing here in this chart. Yeah, maybe how you want to add something
Yeah,
to that.
Yeah, Helco, right before you do, I'm going to show you another chart that's going to allow you to tag team your thought here into the APY conversation. We'll flip this over into the APY chart. Talk to us about some of the risk adjusted returns, why this chart emulates the crypto market, and then we'll kind of get into some of the risk adjusted thought processes here.
Trade on anything: economics, weather, sports, crypto, and more. All on Kalshi.com 24/7 for the world's biggest prediction market. Not your keys, not your coins. From the team that pioneered cold storage, Trezor has just released its new wallet. Guys, if you are still using hot wallets in 2025, 2026, you are missing the entire point. Secure your coins. Get a Trezor at trezor.io.
Hibachi is fast and private perps trading, secured by ZK with Celestia underneath. Go to hibachi.xyz to start trading today.
sounds great. Sounds great.
So please add anything that you may. I don't mean to
I think,
get in the way too much. I'm just trying to move it along. Keep
oh yeah,
showing as much as we can.
yes, I think that's a great chart. I think something that makes a lot of sense when you look even at those both charts is we can literally see, right, that we mentioned different assets, different risk profile. Another thing that we saw in the previous chart is, remember, we are still a niche, and one of the things that we are offering here is regulatory arbitrage. So we still may allow people that weren't able to access institutional level of like products to access those finally, whether you are non-American or maybe you were like, maybe it's like American only, Europeans only, $100,000 up only. Very hard to get into the fund because of like regulation custodians. Much easier to access. However, lots of things we see here is a flight to quality, and there's like levels of like margining, which means we need to remember that one of the biggest yield platforms right now is Pendle, that allows you to, and you have something like Euler Morpho. In very simple saying, you can leverage up on your stablecoins, which means whenever people are risk on, you see for the stablecoin supply to go up because people are willing to leverage up, right? Usually the risking moments of the risk are the same moments where people unwind their provision, burn the stablecoins, because some stables are issued by providing capital with the other stables. So you have those layers of like wrapping, which is some form of like margining, right? And
It's like
this way we see, yeah,
rehypothecation, kind of.
yeah,
Is it like
kind of, right?
okay?
So that's why where people are risk off, they will be exiting their position, which means tokens are burned. If the tokens are burned, the supply goes down. When they are risk on, we can see this go up again. And this,
Oh, leave it to the StableWatch risk manager to tell you to it like you're 5 years old. Piotr had me confused. He's like, "Oh, there's factors," and I'm like, "Dude, come on, tell me how it is." Okay, so then parlay that into the APY, right? So you're explaining how when the risk is on, the supply increases because looping, right?
Mhm.
Pendle, Aave, Morpho, looping, etc. There's all these different types of opportunities available. Also, just more desire. I found that when speculation is high as well, guys, the rates to borrow on Aave go up, on Morpho go up because people are willing to borrow stables to go get yield or to go buy more coins. And then when it goes down, it goes down. So then how do you think that impacted this chart here? Halko, talk to us about some of the APYs that you see here, how it kind of panned out this year as far as what is this, the 30-day average APY compared to TVL?
One thing worth noting here is this is the net API without any tokens incentives, right? So no points here, no like token rewards. It like pure like dollar paid out. I think the most important thing is on one hand, we can see the APY. So worth answering like why some things are at like 3.5%, 4%, right? And why some are much higher. Another thing is if we go to the right, we see we have the logarithmic scale of the supply. And
Mm,
obviously, we have one obvious, huge, big winner, which is SUSDS, because SUSDS is managed to keep the yield at like 4.5% ballpark, while being able to scale up to almost 10 bill. Right? Lots of stables,
mhm.
they sometimes struggle to cross 1 bill, or as we see, so with like maybe with Ethena or maybe with Maple, right?
Yeah,
You have this kind of like maximum level of scalability where then your alpha dries out and you cannot beat
it's
the
kind
risk
of like
rate.
in meme coin trading, right, boys? It's like hard to break the one bill mark in the meme coin bull run of 2024. Sorry for the random injection there, but it's like you've got this 1 billion mark where what 5 stablecoins couldn't get over
Mhm.
this year.
Yeah.
Yeah.
So for them, it's kind of like question of scalability, right? How
Mm,
much can you onboard without your yield compressing? And at the same time, we have assets like, for example, I think Build is like the most, I could say, obvious one that could be the ballpark of a risky rate. So at some time, you are thinking, do I want to enter into more risky endeavors? All right. Or should I just retreat into something that's a proxy for a risk-free proxy, because still, smart contract risk, middleman risk, but it's still some kind of like a safe park, right? And if suddenly your uh, complex product maybe beats the risk-free rate at 50 bips, you need to start to think, is it worth it? Because if has
right.
been, if and that's it, and that's it, and once again you see Sky, right, that has been outperforming the RFR tokens while being able to scale up to like 10 bill, which is huge, huge, huge feat. I think no one has done this.
And there's one important thing to add to this, I think, because almost no other venue got the same kind of guarantees for you as a user to make you feel safe. Because how the like Sky's model work is that there's internal for the ecosystem, internal risk capital, you can call it junior risk capital, the junior tranche, which stars or subDAOs need to put into work so
Mhm.
they can actually manage the Sky's balance sheet, right? And that means if that the incentives are totally different from what you can see some curators in whatever kind of market like Morph or whatever else
Mhm.
do.
Yeah,
So I'm not telling those products are not great, but the incentives are just much
Right.
different because
I think.
you could see what happened with the stream finance, and I think a lot of curators got like no understanding what's going on like behind it. Like we've been
Mhm.
tweeting about it like for quite a long time that hey, guys, you shouldn't really be aping into this. This looks pretty dangerous, actually, and you should be really careful looking into backing. But people didn't want to listen. And the incentive of such curator is just to max out the TVL. Incentive of those few parties which are managing this Sky balance sheet is different because they put their own capital into work.
Right.
That if they're gonna like be misaligned or they're gonna do not practical move and go ahead, too much ahead of the risk curve, their capital gonna be wiped off first, and then the system gonna close position, meaning that it's loose for them
Yeah.
and hopefully not for users. And there is not system like this anywhere in this space besides
Mhm.
Aave. Only Aave actually within the app recently made some like insurance fund, but I haven't like dig too deep into it, so
Yeah.
still need to check it
I
out.
think, yeah, this is very interesting when you think about it. I think Sky is the kind of like biggest trailblazer of like forcing managers put their neck and put their money on the line, which
Mhm.
means Sky right now has the like subDAOs. You've got like Spark Growth OPEX, which means whenever any of the subDAOs is deploying money, they need to put their own capital on the line first.
Yes.
So they cannot put
Got it.
depositors' money into a product without them being the first loss tranche, which means if they lose money, first they lose their own money, and only then everyone else gets hit. So you
Right.
cannot be responsive. Many protocols do not do this, which we unfortunately should change.
Yeah.
And
Can
and,
I
and
ask you
yeah,
about that? Like syrup USDC sitting there at 5.5%, well over the 2 bill mark ish, 1.8, 2.2 range looks like, because that's about where Buildle is, around that 2 point something range. What is the additional risk associated with syrup USDC that allows it to have the 5.5% rate compared to the other like the USDE and the USDS that are clearly a bit bigger but can't get the same average APY, or even like what happened that created that outcome? Even
I think you can. I think the best answer would be for anyone looking into those products would be to read the documents, and people don't do this.
Okay.
But quite often, and quite often, you have to describe like properly, right, what is going on. But
Yeah.
technically, right, Maple's idea is they have their own, you could say, in a very simple terms, how to say this, they have their own internal curation system where they provide collateralized loans for trusted parties. So for you as a user, you basically trust them that they will be able to pass your money to the private borrowers that post collateral.
Right.
And in general, you trust because they have been operating well in the past years. And you basically are betting that the skill of the team and the skill of the allocators and hopefully the skill of a legal department, if
Trust
someone
me, bro.
anything
I mean,
happens,
so we're just trust me
would,
brewing all over again here. Is that what's
I
going
mean,
on? I mean,
there is some degree, right, which
oh
means there is this
gosh.
trade-off, right, between black boxing and openness, and
Yes.
this is the biggest challenge for 2026.
Yeah. One more thing for you guys here on this chart. Well, actually, first, I have never heard of USYC. What is USYC? I never heard of the thing. I can look it up, but I'm curious if you guys.
Yeah, that's the tokenized money market fund. It's some product of Circle. So pretty much you got the TradFi exposure, kinda similar to if you'd invest into Beetle or whatever kind of asset which holds T-bills. So here it's not
Okay.
T-bills, but yeah, money market funds. I would say similar bracket.
I should have known that. Circle's big one, huh? So they're growing that in addition to USDC. Okay, cool. I guess, guys, who do we expect to be leaders in this category next year? And I think in terms of APY, and I think rooted, the question's rooted in rates are coming down. Trump is bringing in a new Fed chair next year. The ECB just also said that they're adjusting for a rate cut cycle. These yield bearing stables are going to need new forms of yield. However, as we discussed, when speculation is rampant and markets are doing well, yield is increased and the amount of expansion supply also increases. And so when you get rate cuts, you also typically get market expansion because of liquidity injections, and generally people get more bullish. So I'm seeing a recipe here for like some pretty strong growth. Like we said, I think we get to maybe 100 billion in 2026 for total TVL. I think that would be a massive win for yield bearing stables. And then I guess the question is here, what's going to change in the yield component? What do we expect? Knowing that we're going to get a rate cut cycle, is that going to be reduced yield or increased yield? I kind of laid it out. I think there's multiple arguments to be made. And then who do we see really kind of rising to the creme of the creme here in terms of TVL and yield next year? Who would you guys be placing your bets on? Kind of two-part question.
Yeah, so I think really that the best position, because of just no concentration into one strategy or like one position, is Sky, and that the growth still gonna be like accelerating. Um, as there's like few factors for it. There are going to be a lot of credit creation, right? Especially in the US, and like big, not only financial but whatever kind institutions in US are looking always for more money, from X slash Twitter to like Stripe and some others. They always look for new private credit lines to expand the business. This is how it's going, right? Like everybody wants to see S&P chart going up. So they need more money for this expansion. And this money definitely can be found in the US market from like legacy TradFi institutions. But I believe that some part of this money actually going to be funneled through amazing capital coordination plays, which is crypto, and from places who can coordinate this in a good way, like Sky or like Maple actually, which also like provided a lot of great moves in like last years and growing in TVL into this private market. So private credit market definitely gonna help us grow the category. This is one thing. The other is that we need to look for like more niche specific places to allocate this money. And this year, I think the two most interesting things we've seen being USDAI, where the guy's trying to lend the GPU power, right? And you can fund that as a retail person, but of course there are also like some larger LPs interested in that, and probably more of the like yield bearing vehicles are going to be working with this type of venues to try to also get this type of yield and acting as kind of fund on fund or so, or just a money manager while they diversify their portfolio. Some other interesting venture is a daylight, and I just expect that
Man, this
all
is
of
just so funny. Sorry to interrupt. Like, we talked to Vance and Michael a lot. We talked to AJ from Serotonin. Rob and I are having this conversation like every day for the last 2 weeks. We're like, all right, our brand is completely shifting, focusing on these, and everyone just keeps saying M0, Daylight, USDAI, Sky, a couple others, and like this like tokenization stack, and like this is all you got to pay attention to 2026, guys. Like,
But
it's just it
there
keeps
there is,
happening. It keeps happening.
yeah. But there is something also interesting. I have like my own theory that comes straight from the trenches, which means if you get the rate cuts, people get more greedy because there is like easier to get the money. If people are greedy, people are more willing to embark onto a risk. And I would say something. There is one thing that we need to recall. What happened in 2020 or 2021? We had insanely low rates, close to zero. It was the golden age of DeFi. Why? Because depositing money in any lending protocol was beating lots of things with regards of risk, right? Because when you think about the risk rate, how to say this, lending markets and all these kind of like most organic, most like core DeFi protocols, they quite often have their curves hard coded, right? Which means your interest rate is a function of utilization. High utilization, high level of interest rates, people borrowing a lot. That means then suddenly, in comparison to anything else, those rates look very, very good risk adjusted, right? If your risk-free rate is 4% and big lending platform lending is 4%, it's not great. If your RFR is 1% and you can go here to DeFi and you can lend at 5%, it's 400 bips over the risk rate. It's insanely good.
That is when DeFi shines. When like rates gets around
Literally.
2%, 1%, and DeFi is way higher. It's like it's because right now it's pretty much the same, and people are pretty bearish on Twitter about it. I saw some tweet. It was like 4% on Aave, 4% on money market. What are we doing here, guys? It's like, all right, bro, come on, man.
Yeah. But then we have like 1% on money market or maybe 0.5 because they need to cover the admin costs. And suddenly, going to the most trusted DeFi protocols and getting 4%, 5%, 6% on like the most basic activity, beautiful times.
Piotr, I didn't mean to cut off your last point. Did you want to finish that up and maybe close us out here, guys, on just generally your vision for 2026? What you're seeing here, kind of your maybe some like goals or targets for the space for stablecoins in general, and also for your company, StableWatch. Like, what do you guys have up your sleeve for 2026?
Sure. So finishing the prior thought, like with USDI, Daylight, and so on. Like the bottom line is like we just need more sustainable business models. I think like the next big narrative. I mean that been true for bear markets always is you need to make money. You need to have actually real functioning business. But I believe while we interacting more and more with institutions and there's more institutional money coming into the space, adjust the way. Like you will need to have real business touching like real human like companies problems and so on. And this type of companies do that, and there's a lot of opportunities, especially around like private credit, lending activities, and so on, to come to the space and boost this. Um, and as you said that Vance and the team been speaking about this recently, and about OBEX, this is also big acceleration point for Sky Custom, I believe, as the OBEX as accelerator gonna be looking for more teams like I think USDRI or this type of a venues to say, which will be able to structure their product, silo risk, so all of the balance sheet managers from the Sky side or just Sky will be able to allocate into it. So I think this is the biggest unlock for the whole ecosystem, actually, for the next year, and especially for Sky. But there are going to be quite few new exciting products in the space, and especially Sky and all of these sub DAOs going to be profiting out of this. All of these new ideas also can do pretty well. And all of those people who are not already diversified with their yield strategies, with their balance sheets, they're gonna keep losing. And we already see that in those TVL charts. So until they're gonna switch into similar mode to Sky, which is diversifying the balance sheet, they will have a hard time in the next year. So this is it. And for us at StableWatch specifically, you can expect that actually like we're gonna be providing much more info around the Sky ecosystem. We're working on some new dashboards as we believe that this is one of the most exciting things in the space at all, and we want to stay on top and provide all of the info to our users around that. And we're thinking of
Here we go.
of quite few new formats to provide you alpha and try to help you mitigate all of those risks. So this is it, and quite sometime soon in Q1 you can probably expect some one big news from our side, but I can't
Okay.
spill
Sounds like
the
somebody got a payday. Yes, sir.
Maybe, hopefully.
Got awesome conversation today, Piotr Halko. Great vibes, great year for the yield-bearing stablecoin space. I'm glad we focused on this today. The traditional genius stablecoin space is interesting too, but really this yield-bearing space is where a lot of the activity is at. Quantum Cowgirl, interesting X handle. Is this recorded? Yes, it'll be posted on the roll-up YouTube shortly after this call ends tonight. So probably a couple hours, it'll be up there. I'll share it with the StableWatch guys. I'm sure they will share it. There'll be some nice clips going out. Guys, we're going to be live for one more guest here talking about Base and the Coinbase system update, recapping some of the stuff with Base app. It's been Stablecoins Year in Review, Stabled Up, episode number 14, brought to you by our lovely friends at Frax. Piotr Halko, boys, incredible work on the company. Looking forward.
Thank you.
Thank you very much, guys. Thank you for having us.
Thank you.
It was great.
Always a pleasure, guys. Welcome back anytime. Go Sky, go Yield Stables. It's going to be a big 2026. 100 billion, baby. 100 billion. All right, boys. Later.
Let's go. Thank you very much. Bye-bye.